You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. And now, it's time for the show that breaks down the options market from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block with your host, Mark Longo from the Options Insider Media Group, and co-hosts, Uncle Mike TOSAW from St. Charles Wealth Management, along with Mark the Greasy Meatball Sebastian and Andrew the Rock Lobster GIOVINAZZI from OptionPit.com. The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/optionsinsider. And now, get ready to hit the Option Block.
All right, everybody. That rockin' tune means it's either Monday or Thursday. This time it's the latter case. Yep, it's time for the Option Block, your bi-weekly source for all things options related. If you like it in your ear holes immediately, like I mentioned, Monday and Thursday, noon Central, 1 p.m. Eastern, you know where to find us on the Mixlers. Or just follow us on all the social media platforms. We tweet out the link there as well. So you can get it live if you want it. Otherwise, you try to get it to you pretty quick on the turnaround there on the old network. You have a lot of content hitting you, so it takes a little while sometimes. But we try to get it out to you because there are a lot of things happening hot and heavy out there right now, like today. My name, of course, Mark Longo from theoptionsinsider.com, as well as, of course, from this fine network. You know the drill by now. Subscribe to the full network if you haven't already. Make sure, if you like what you hear, leave a review. I'd like to see a lot of you are doing that because it helps the new people. And there are a lot of new people these days floating around places like iTunes and others saying, what can I find about the market? So it helps the new people continue to discover the network. Like to see we have a huge influx of people over the last few months. But we always like more. We always welcome more. So help your friends and others get a little bit of options content in your lives. Leave a nice review on your platform of choice. If you don't like the Rock Lobster, don't hold it against us. That's all him. And make sure you keep those questions or comments coming. We do love to hear from you guys. Let's see who we're going to hear from today. Joining me on the old all-star panel today. You know, it's a super Uncle Mike type of market. So we got to have Uncle Mike TOSAW from St. Charles Wealth Management. Uncle Mike, welcome back to the program. I guess we should have had you on one day earlier. Then it would have been much more Uncle Mikey.
Right. No, I mean, it's one that, thank God for rules. Thank God for rules and put options. Those are the things that I'll say today. It's definitely a lot to talk about today. And can't say it hasn't been exciting. This is definitely, I would say this has been the most exciting year of my trading career. This one even trumps '08. No pun intended.
Yeah, there's a lot of adjectives I think you can throw out so far for this year. Just from forget the other things, forget the broad perspective. Just from a purely financial perspective, you could call it interesting, surprising, darn right, insane. I've heard every adjective known to man attributed to this market, and you can pretty much make an argument for all of them out there these days. You can also make an argument for, let's say, cynical, old school Mainer, even though he really isn't from Maine, all sorts of fun things when we talk about the Rock Lobster, a.k.a. Mr. Andrew GIOVINAZZI, a.k.a. the man who fights against the clan privateers every day, fighting the good fight Mr. Rock Lobster, welcome back to the program, sir.
It is good to be here. I have to say, Volman was skeptical yesterday on how the vol was acting. Thought there could be the potential for a little movement. I was only guessing a couple points either way in VIX. Had no idea it'd be 8. So, but nonetheless, he's not complaining. So onward to what proves to be, I'm sure, a raucous and fun show.
Yeah, let's get to that raucous and fun show as we kick it off with the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody. Welcome to the Trading Block, the portion of the show where we break down what the heck is trading out there. And you can kind of just say that, right? What the heck? What the heck is going on? You can use stronger words if you are so inclined. But yeah, it's one of those days. We've been saying for a while here on this network, man, this rally seems to be effervescent. It just really seems to be, perhaps, as I've said before, whistling past the graveyard a little bit. I alluded earlier, I went to cash when the National Guard rolled up on me, and we had... In fact, I think we have a listener commenting about that a little bit later. We have Mr. Rhodes come on the network not too long ago saying he was completely in cash. He didn't like the way VIX was shaping up. There were just a lot of indicators out there that were saying, man, this seems like a lot. Quite possibly too much too soon, given all the other things that we know are out there and also the unknown unknowns that are still lurking out there. Most of the major S&P 500 firms could give very little to no guidance for the future. We don't know how the small businesses are going to recover, particularly now with this wave of unrest and protests that has hit the nation. That's going to complicate things. Just a lot of insanity out there, and yet the market was rallying mostly on the strength of kind of the top 5 to 10 names in the S&P, and it seemed like a very skewed perspective on what was going on out there. And of course, maybe today is a bit of a reflection of that. Maybe the fact that I was just joking before the show with the Rock Lobster and Uncle Mike. Maybe the fact that NASDAQ has hit 10,000, everyone all of a sudden that round number was enough to say, wait a minute, whoa, this is too much too fast. The first time in 49 years, NASDAQ hitting that level. Maybe that was what spooked it. Obviously, the Fed talking up a good game this week as well. All sorts of things combining. So coming into showtime, this sell-off is exacerbating, listeners. It's hitting pretty hard. S&P off nearly 4.5%. Right now, Dow off over 5%, 5.33%. NASDAQ, actually the laggard, only off 3.8%. A mere meager. This is reminiscent of the limit down days we saw a few months back in the middle of March. So we kind of we sold off, we wound the yo-yo back up again, and now we're selling off again. It's a lot to unpack here. Of course, the Fed really spooking everybody this week when they came out and said they saw a very quote-unquote long road ahead for the economy. They also estimated, which is something they don't usually do, they estimated rates would stay around 0 till about 2022, which is a very bit of a long-term guidance for them. They don't usually give that sort of insight into what they have cooking over there. Of course, on the other side of that, on the elected officials side, Trump not liking that too much, he came out and said, I see the numbers also, and I do much, quote, I should say all caps, much, all caps better than they do. We will have a very good third quarter, a great fourth quarter, and one of our best ever years in 2021. Apparently that little bit of heated political rhetoric was not enough to talk the market up. Maybe that exacerbated it. Who knows? Either way, we're selling off pretty hard. VIX is popping as we speak. It's rallying more. Come into showtime, it was only up about 7 handles. Now it's up about 10.5 handles, up at about a 36 and climbing. Listeners, VVIX, which is of course the vol, that's up to nearly 130 at this point. That's up nearly 20 handles just from our last show on Monday. And our old friend VXX, we were just talking about how someone had piled into that 35 strike in July, over 100,000 contracts. And he took them off for a slight winner, not great. And then he rolled into that AUG, I think it was, 30-22 put spread? Hopefully he took that one off because VXX back up with a vengeance. It was at about 35 coming into showtime. Who knows right now? It could be up a little bit higher. That puts it up about 5.5 handles from where it was. Now it's at 37.30. Listen, up another 2 handles and change. So you're talking up almost 8 handles from our last show. So hopefully our friend, Mr. Rock Lobster, we'll get to it tomorrow on Vol Views, but hopefully our friend rolled. We kind of mocked him for taking off the Julys maybe a little bit too early. Hopefully he took off the AUG as well. I guess we'll find out. Let's go around the horn. Since it's the Uncle Mikeyest of days, let's start. Uncle Mike, if you want to retroactively from a couple of days ago, do your all-time highs thing just to get it out of your system, you can. And then light up your tape on this kind of blood red day, sir.
Well, the S&P is still well off of all-time highs, even from the other day. So
that's true.
I only do the S&P. I don't count that.
Oh, you don't count that crazy NASDAQ nonsense.
No, not at all. Not at all. I'm an S&P 6. Oh, I mean an S&P 500 kind of guy. So, and I think that with what was really concerning to me yesterday, and just going into this, was when the S&P got past the 3,000 mark and the 200-day moving average. I thought that was a big thing that was going to help us go to the upside. It did. We did rally another couple hundred points on the S&P. And so the next hurdle was when we had to get to the open of the year, which was 321.84 for SPY, which is what I follow. So essentially you can just say 3,200. So I felt 3,200 was kind of a key number, and that if we couldn't get by that, that was kind of a concern. And then yesterday, the Fed didn't really move the market that much yesterday when the Fed was actually doing a speech, but obviously the market moved a lot today. The news, of course, from the macro level is, of course, maybe there is a little bit of an uptick in corona cases, combined with the Fed's going to keep rates low for the next 2 years, and maybe that's not a good long-term outlook. So those are a couple of things. But the reality of it is, as any market participant will tell you, are there more buyers or are there more sellers? And there's a lot more sellers today. We have had a major rally over the course of the last 2 months or so. So just to put it into perspective, on March 23rd, the low of the year, or the low of this market was, and I'm looking at SPY, was 218.26. We rallied up to, I'm just looking at the high here from a couple days ago, 323.41 in SPY. And so whenever you're getting a rally of almost 50% over the course of 2 months, you're going to have some type of a pullback. Now, there's two cases for this right now. The first case, of course, is that, we knew this couldn't last and we're going straight down. Or the other case is that one thing that I've said on this show for a long time is big rallies begot big pullbacks. And so when we have a near 50% rally over the course of less than 3 months, then you're going to get days like this, and it's going to happen. So the way with which I'm looking at the markets right now is I like the support levels that exist around the 3,000 mark or around the 200-day moving average, which is very close to around that level, maybe a little bit higher than that now. It's come up a little bit. It might go down a little bit after today. So I like those levels, and I don't know if I would necessarily call myself a major buyer right now, but within my aggressive strategy, I do allow for up to a 5% trade within that, and I might be doing a few things maybe tomorrow. We'll see. Not sure yet. I'm definitely not doing anything today except for watching and smiling because of the fact that my aggressive strategy is all in cash. But with tomorrow, if we stabilize, it might be an opportunity because of the fact that we have the 200-day moving average and we have the 3,000 mark on the SPX. So those are a couple of things with which I'm looking at. But the final thing that I would like to say is that in order for a market to be strong, in my opinion, it needs to at least be positive on the year. If the market is not positive on the year, then it's not strong. Now, yeah, you could say, okay, maybe it's January 3rd and the market's down 0.1%. Okay, well, big deal. It's not strong or it's not weak. But the reality of it is that we have had 5 months and 11 days for the market to go higher on the year, and it's not. It is down on the year. It is negative. There are more sellers than buyers on the year. So in my opinion, this is a weak market right now. And so if it's a weak market, then I really don't want to have a major stake in it. So I know on this show, over the course of the past 900 or so episodes, I've said I'm long-term bullish, short-term cautious. I think everyone's probably heard that and said, "Oh, you're just the perma-bull." But in reality, when you have markets like this, you have to be cautious or you're not going to be trading very long. So that is my take on things.
So just to put words in your mouth, then maybe just paraphrase you a little bit. Uncle Mike made your buyer here. That's what you're saying.
I'll give it my 50% guarantee. I haven't given that in a while.
Super huge buyer at these levels here. Listeners, Mr. Rock Lobster, we turn our attention now to you, sir. Obviously, you mentioned our old friend Volman making a bit of a resurgence out there in the old world of all things VIX. Obviously, VIX popping off out there right now. What's lighting up your tape out there today? What zone are we back in, and what does Volman have to say about all this? Volman is telling you to unmute yourself, sir.
I was so talking into that muted mic, I can't even. You know what the problem was? Volman can't talk. He's a stick man.
Volman said he didn't agree with you when he hit the mute button.
When I bring him out of the closet, he starts talking, but nothing comes out of his mouth. So it's very hard to really get him on tape. So what I noticed is what I posted is, and always a very curious thing. And I know TOSAW, I think he kind of, when his nose gets a little out of joint on stuff like this, you like to see vol come in a little bit when you kind of have a rally. And, when you have these very steep rallies, let's say like we had last week, remember that crazy climb. Everybody's crazy for the Q stocks, the big leaders. Like the vol dragged up, we had a vol low on Friday, and ever since then, vol went straight. It never saw that level again, not even close. Which is never a bullish thing, a bearish thing for vol. I'm sorry, never really a bullish thing for market long term, because vol's kind of going up. It's very hard for that rubber band to just keep stretching and stretching and stretching. Usually one thing has to go. So in this case, the market went and vol went flying to the ceiling. So what I would say is when you're looking at this and you're trying to evaluate this stuff, there's certain things you like to see. Like Mike says, I don't like getting aggressively long until everybody's happy with where the market is. Perfectly reasonable way to be long, right? Vol, I don't have a lot of faith in rallies as long as when VIX and SPX are climbing. That generally means there's a lot of heavy put buyers to kind of, like, as people get new highs, instead of really people taking profits, they kind of buy puts, and it's more like, they want to be back spread the market, meaning kind of making money up or down instead of really being aggressively long. And that was kind of the tell for this. But Volman posted that yesterday. And we had similar positions in option pit, just, kind of buying a little strangly action, things like that. Not super aggressive doing it, but, nothing in any of our portfolio stuff that was kind of flat out long. Everything was kind of hedged or buying a strangle or something of that nature. So what I would say is that's what we were that's what we're looking at. That's what I'm expecting. How far do we go down? I have no idea. 2,800, 2,700, 3,000. Who knows when everybody decides it's either real hysteria or not. Or I would assume that people, if there's this COVID thing is popping up again, that people actually know to jump on the bandwagon and kind of do what they need to do very fast this time, right? It's not like, you need some common sense. So we'll see what happens. But again, I think the huge rally in the market, getting back to all-time highs when things are really not, especially for the Qs, even though it's only some stocks, I think that was a little, there's a lot of momentum based on that, and we'll see what happens at this point. But now you're at a point where you have VIX at a 35. Let's see if we can have another day of this kind of action to keep the vol here. As curve-wise it goes, it looks like it's still looking for continued vol. So it wouldn't surprise me to have, maybe another 2% down day or something like that tomorrow. Because all of a sudden all all the happy buyers definitely have left the building.
Well, you were never a happy buyer, so I guess you're hanging out here after all. But staying on the VIX theme for a second, your buddy out there on the Twitter land, the VIXologist, tweeting out interesting chart about looks like 3-month VIX, which is not something we talk about too often, but there are different flavors of it out there. There's more of a midterm, quote unquote, VIX versus VIX. That ratio getting a little wonky, which is kind of interesting. Also on the VIX landscape, Mr. Rock Lobster, are you excited for this return of the mini/micro VIX futures out there? I mean, they used to have these. No one really touched them back in the day. Is this the environment where you want a smaller, bite-sized VIXer?
I think where it would fly is is it going to be the futures and the options or both with the new product? Well,
it came out of the CFE, the CBOE futures exchange. So I think they're just talking about, I would assume options are going to follow, but maybe if they're following CME's lead, and it seems like they are, because CME has blown the doors off with their micro equity futures. They waited about a year before they launched options, so it might be a similar case here. They're going to get the futures approved first, and then go. I don't see anything here about options.
Yeah, okay, good. Sorry about that. I assume options will follow, but yeah, I think if people are slinging like little $100 VIX E-mini futures, what the heck? The CBOE can make $1 on $100 underlying instead of $1 on $1,000 underlying or $18,000. So I think it actually it might add some liquidity to them. Also, maybe it could also add the future to more platforms. So I think this is a good thing because the E-mini has been such a freaking home run in general. I don't see why this wouldn't get more retail interest for sure. And the fact that you have tons of retail in there could actually help the liquidity in the big future as well. So I think this is a good thing. In general, more transparent liquidity is usually, at least in my experience, always better. Yeah, it's generally hard to be worse.
Bite size seems to be the way to go. If the micro futures, which are smaller, a fraction of the E-mini futures over there on CME, if their success is any indication, they're doing hundreds of thousands of contracts a day. Again, a smaller size, but still. If that's any indication, then maybe there is a demand for a pint-size, a bite-sized little mini VIX out there. Let us know. Are you intrigued by this mini VIX? Let's see what else is intriguing out here. Kind of a quiet end here to earnings season. Not a lot popping off. Like I mentioned, we had GameStop, Chewy, AMC. A lot of people watching them. They put out filings. They may have questions about whether they're going to be a going concern going forward. They're popping off after the bell on Tuesday. Wednesday, we had Chico's out there, for those of you interested in such things. Children's Place on Thursday, as well as Adobe out there. Dave & Buster's, another one that's perhaps going to have issues, or is already having issues as a result of this pandemic. No one can go play bar games right now and all these other things, so a lot of concern there. Friday, Party City. It looks like the earnings report for the season now, we pretty much have a pretty full picture of it, so you want to check it out for yourself. It is available over there, theoptionsinsider.com. I kind of broke it down for you before. We have some adjustments to it now, but still overall, the only week that really outperformed from a vol perspective was the fifth week. So towards the end there, 126% of the vol that was priced in. Every other week was under 100%, so names moving less than what was priced into their straddles, which I guess in hindsight makes sense that they were underpricing vol. That's kind of counterintuitive. What you would think that this would be the most questionable season ever because we really have no data, and yet market not really punishing names a lot for not really giving a lot of information. Maybe that's all getting baked in now as a result. Maybe that's why today's sell-off is a little bit exacerbated because of that. But either way, we saw overall about net 90% underperformance total across the board for the season. So about 90% of what was priced in to the straddles net across the entire season is what we saw delivered. Now let's see what we saw, or I should say what our Eye of Sauron saw, because it is time for the Odd Block.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody, welcome to the Odd Block, the portion of the show where we break down what the heck is lighting it up out there. Let's kick it off. Actually, our friends over there in Orat's Land, they do a little bit of unusual activity parsing as well. So let's give our Eye of Sauron a break for a minute here. Let's see what their scanners have turned up. And coming into showtime, they were all hot and heavy about Six Flags Entertainment. This is, of course, the company that runs all the theme parks, probably a Six Flags park near you out there, listeners. Ticker symbol 6, appropriately enough, SIX. As of right now, they're $22.61 off, nearly $2 or off almost 8%. So a rough day here for Six Flags. Of course, it's been a rough time for any company that's really out there, Disney with the parks. You know, everyone's got this outdoor kind of mass, large public entertainment. You have to be in person to do it. Dave & Buster's, whatever it is. They're all having issues out there right now. Six Flags, no exception out there. They were highlighting, well, coming into today, let's see, today was a pretty busy day, as you might imagine. Coming into showtime, there were already almost 15,000 contracts on the tape. Normal ADV is shy of 9,000, 8,700. So closing in on 2X, they might already be there as of right now. Calls leading the dance, which is kind of interesting. Almost 14,000 versus about less than 1,000 for the puts. So you're talking about almost 21-1 calls over puts. So taking the drubbing out there, but calls leading the dance. And the number one trade out here, well, before we get to that, let's look really quickly at the year that's been out here in Six Flags. A year ago, Six Flags was feeling strong, feeling its vigor. It was over 50, 51-11. And over the course of that time, the next couple of months, it rallied all the way up to nearly 60, 59 and about a half. That looks like around August, so probably at the height of their season when things are rocking and rolling out there. Then they kind of slowly drifted down. Actually, by the time the new year started, they had been cut almost in half, down to about $35 out there. So not a good period from August here to January already. Then, of course, looks like it started to recover. By February, it was back up to almost 40, and then we all know what happened, mid-40. It took it on the chin. It sold off. Get ready for this, listener. Six Flags hit a low of $8.75 at the height of the madness back in mid-March there. That seems like that's an intraday because they closed at 10:36 on the 18th. So that must be an intraday low on there. Either way, a far cry, about a seventh of what they were trading back. Not quite, almost. They actually what they were trading back in August. It was. So yeah, interesting stuff out here for Six Flags. And then today's paper looks like it's the 17 halves. So a meaty, as they put it here, a 92 delta call. So that's a meaty. That's pretty much stock at that point, listeners. 11,020 of them going up out here today with prices, a whole bunch of different prices, but looks like around, the option's pretty wide, as you might imagine, too. Looks like about 80 cents wide out here. Mr. Rock Lobster, OI, worth noting, about 12,000 open on that OI. So perhaps, let's pull it up here and let's see. This is some closing paper out here. Looks like worth noting, I think they parsed it. This OI might have been opened back on May 15th. So it seems like perhaps someone put on some 17.5 calls back in May. If that's the case, these bad boys are probably looking pretty good. On May 15th, the stock was, $19.11. So it seems like, Mr. Rock Lobster, even with today's sell-off, someone might be getting the heck out of Dodge with a decent profit. What do you think, sir? Bob Man's got to stop hitting that button.
Nothing, Kyle, cut that. Nothing is working with the mute button today for me. I'm punching buttons. I'm doing stuff here. I'm doing stuff there. I think getting out of Dodge, that sounds kind of, as much as I like to argue with you, but it's hard to argue with you when you're right. So.
Which we all know, listeners, is always, right?
When you are the benevolent dictator of the Option Insider Radio conglomerate globally, yes. I think there is I must be right in the end. However, this time I'm going to say, maybe a little, taking a little bit of money and running. So actually I'm trying to do that right now as well. So, very, very interesting. And it's like one of these things where it's something that Mark talked about before. It's, is Six Flags going to be around? Is the thing going to be around? And people are going to go back to the parks, and even if they have to wear a mask, they'll go to the parks. So I think it should come around, but we'll see what happens in there. But anyway, I think somebody's just taking it and running.
Six Flags better be around. I'm a pass holder out there. I'm a pass holder at Disney too, so I'm 0 for 2 on both of these trends that are not exactly pandemic friendly out there right now. Let's move out to something maybe a little bit different. We don't talk about this one too often. It's a name we don't really hear much about in the States anymore. They used to be a big maker of handsets and things. Now they're mostly focused on the overseas market. This is Ericsson, ticker symbol ERIC, Eric. Out there trading right now, looks like about $8.89. Let's look back at how this bad boy has fared over the past year. A year ago, they were trading a little bit higher, about almost $1, about $9.71. And it looks like they topped out not that long after in June of last year, right around $10.04, $10.06. That was kind of their high for the year. And then they kind of sold off pretty hard after that. By September, they were trading $7.70. So it's pretty topsy-turvy year here for, I won't even attempt to pronounce their full name. It's a mouthful, about 14 syllables. But let's just go by Ericsson. And then back up, a rally again to about 9.25, almost 10 in December. Then selling off in February down to 7.89. Then actually rallying again by mid-February up to 9.20 or so. And then we all know what happened later on in February, a big drubbing for them as well. Got down to 6.15. And then this chart looks like a lot of the rest of the market, an aggressive V-shaped recovery here in Ericsson. Got all the way up to $9.84, and now they're obviously coming off the other side of that back down to $8.90, off about 56 cents or about nearly 6% on the day. It seems like someone, though, listeners, someone may be deciding this far and no farther, because it looks like someone's drawn a bit of a line in the sand here at the 8 strike in Ericsson to the tune of a 10,000 lot of the July 8 puts going up for 14 cents, so a few cents off the bid. Over there on the MIAX Pearl, our old buddies there on MIAX. I'm talking to them tomorrow on Vol Views there. So getting a little bit of paper out there in Ericsson. This is obviously opening. There are earnings in July. So this is a July. Let me see when expiration is in July. Actually, expiration is on earnings day, the 17th. So this guy could have an interesting expiration should he choose to keep these puts open all the way till the end. That's the challenge when you're writing puts, Mr. Rock Lobster, that expire on earnings day, because if you're hoping for a lot of juice to come out, granted there isn't a lot of juice here, it's only 14 cents, but if you're hoping for that juice to come out hot and heavy ahead of that, maybe you're going to be disappointed. Would you concur?
Yes. I mean, the problem is 18 cents, line in the sand put, 8 strike, and we're trading. I'm just pulling it up right now. We're back to we're right there again, 8.90. So, it's a little skinny for a line in the sand put, but it's still a fairly decent. It's like anybody, line in the sand. I want to own it. And just recently, I think it traded down $7 or something like that, the 6.5. So I think it's a decent line in the put sand relative, but they might very well get put this week.
Yeah, it could happen. Could happen later today, given how things are popping off here. But he got his 14 cents, so it's all good, Mr. Rock Lobster. But either way, yeah, this is an interesting one. Writing puts that expire on the day of earnings. That's always a difficult dance when you're trying to get that premium. But if he wants to, he might really want to buy it at 8 because he ain't getting a ton for these puts. So tell you what we're going to do, listeners. We're going to watch this one. We're going to come back, see how he fares, maybe on expiration day itself, right before it, and see how he's faring, see if they're still open. Now let's move out to our final name. This is PPL. No, it's not PeopleSoft or People Corp. It's PPL Corporation. This is an electric services company out of Allentown, Pennsylvania. Ticker symbol PPL. Trading today $26.02, off about $1.85, or just tick down, 26.01. So off $1.85, almost 6 2/3%. Not a good day out here. A lot of these names we're talking about here outperforming the market to the downside today. A year ago, it was trading a wee bit higher, about 30.61, so a few bucks north of where it is right now. Gently drifted up to about 36 and change, right before the pandemic hit in mid-February. Then it kind of sold off like everything else, got down to $18.12, so about $8 shy of where it is right now. Then kind of bounced back and then bounced back some more, and it kind of topped out recently at 30.65. So it got not all of it back, but a good chunk of it back here by just looks like about a week ago, not even. And now it's given up a lot of that since then. So Bouncing V, Bouncing B. A lot of names as a result of this madness out here, listeners, looking like biotech charts when they're usually pretty sleepy things like utility out here. Let's see what's going on out here. What did our Eye of Sauron pick up? Looks like someone thinking this sell-off here is kind of real, at least in the near term, because they're fading it. Coming in and looks like dumping about 5,500 of the July 28 calls. So as of now, about $2 out of the money. But as of this morning, they were at the money calls. So getting 41 cents for these, so a penny off the bid. This guy wasn't playing around. He's like, I need to get these done. They were 40 cents at 55. This one up on the Philly. Let's see. Earnings are the 4th of August, so no earnings in this one. So Mr. Rock Lobster, seems like someone took advantage of this recent near-term, mostly V-shaped, not quite all the way, maybe more of a leg of a W here. But still, a bit of a recovery here in PPL to overwrite the heck out of this one. Is that your takeaway as well, sir?
The odd block's more fun when we disagree. I feel there's more give and take for the listeners they can enjoy the
ignorant fool you.
The flying umbrage. But I have to say, you're just, I guess, a market route brings out the best in you and, in your analysis. But this falls into the rubric of 1% premium for a month, kind of blah, blah, blah. But it actually doesn't look like too bad of a thing right now. I mean, with vol as where it was, super high, I mean, you rarely have a market rally into a 27 VIX like we had over the last 3 weeks or 4 weeks or 5 or 6 weeks, right? How many market rallies do you have? And when you're at the top, the vol's still 27. I can tell you when. None. Exactly none. That's never happened before. So if you're afraid that you missed out on the huge rally, you might have another shot down here. You certainly have a shot on a lot of stocks. So, this does look like just, right. It has that 1% minimum for the yield, which I like. And if you get the rally to 28, you're going to do much better. So, same rule with all buy rights, though. When you have them, be happy if the stock goes up and you get taken out and you get to keep the money. Don't be grumpy if the stock keeps going up. Because if you get taken out, that's the best result you could have got. So buy writing is for trying to add a little yield, not really for, if you want to go long. So just remember that when you're buy writing, and you'll be less grumpy in the future.
Yeah, we've said that many times. People, when you get called away, you win. Yet that's not the viewpoint of many of our listeners out there. Let's see what other viewpoints you guys may have as we get into some of your mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the Mail Block.
All right, everybody, welcome to the Mail Block. Let's kick things off, actually, with a question from one of our panelists here, Mr. Uncle Mike, sir. Mr. Uncle Mike, I believe you have a question that you want to share with the listening audience, sir.
Yeah, so I had a client contact me today on ticker symbol NKLA. So Mark and Andrew, go ahead and bring this up and just take a look at this. And in particular, the January 21 options chain in general. So in looking at this, let's just say, for example, that you have right now the stock trading at roughly $62 per share. Let's say that you were to short the stock and simultaneously sell a 60 put. It's essentially just selling a naked call, but it's you're doing it with stock and a short put. Your credit's going to be roughly $45. Now, of course, the risk to that is if the stock were to go higher. You get the credit of the $45 or whatever you get filled on. And if the stock stays the same or goes down, you'll do pretty well for yourself. But if the stock goes higher, of course, that's the risk. So now with that, you have the ability to buy, let's say, a 60 call or a 65 call, whatever way you want to go with it, for significantly less money. Meaning you can buy the 65 call for roughly $16, $17. And then by doing that, you're getting roughly twice the credit as you're paying for the debit for the protection. So with that, after calling 888 options, there are a couple of things going on with this stock. Number one, it is about to go through a merger with a private company. And then number two, this is also something that's considered hard to borrow at this point. So I have a question to the veteran floor traders. What ways are there to make money in situations like this? The way with which I described, I understand that you're likely not going to be able to short the stock, but whenever you have option setups like this, to where the puts are just insanely more expensive than the calls, and this is fairly true throughout a lot of the months with this, what ways can you make money in situations like this?
Yeah, this is the hot one, obviously, these days. I'm on a side note. I have to just how many companies can get out there and trademark some derivation of Nikola Tesla's name? We get it. He did electricity way back in the day. Tesla coils are pretty cool, but I mean, come on. You got freaking Tesla. You got now Nick to taking the first name. I mean, it's getting absurd. We get it. You do electric trucks. Super cool. Find some other freaking brand to wrap your head around out there. Nikola, of course, ticker, easy for me to say, NKLA. Trading right now, listeners, about 62 and a half, and actually not 62 and a quarter. So feeling it on the chin today, off about a little over 4, about 4.2%, 273. This is the name that's popped of late, as Uncle Mike has mentioned. A little bit of corporate action lurking this chart. If you hadn't seen it, we'll testify to that. A year ago, it was trading $10. Just a few weeks ago, it was trading $28. So it had a good run already. And then it recently popped from about 36 all the way up to 79, almost 80. Actually, it's like 52-week high got up to 93, almost 94. So, yeah, that's all sorts of corporate action territory out here. You see a chart like this, listeners, and maybe your first thought is to maybe be a little, do your due diligence like Uncle Mike is doing. Kind of fun finding the options changes, by the way. I had to dig a little bit. For some reason, my platform I'm using here doesn't want to give me a lot of data on Nikola. But Mr. Rock Lobster, I know, like myself, you traded a lot of, I mostly traded big ones, like your Intels and others on the single name front. I think you traded a lot of dicey, dubious ones that had a lot of crazy corporate actions. Anything like this leap into mind for you, sir?
Well, I mean, TOSAW is right. Just I didn't do any research into this. Just I could tell you from the pricing, the borrow rate is through the roof. So basically, you can't short the stock at all, is what it looks like. So it goes from the fact that, when you can't short it at all, literally, unless your clearing firm like a Schwab or whatever has the long that you can short, you simply can't short it. So if you try to put in a short order, it gets rejected, right? So that messes up all the put pricing because nobody's shorting stock. The liquidity provider can barely short stock, and the new rules are they have to show that they can have the stock in order to short in the first place. So obviously then basically puts have to be so expensive that they have to guess. Now, if this is a takeover, you would actually have to look at the corporate action tombstone, kind of the document, to see what the deliverable was on the share swap. I mean, what are you getting in the takeover? And I haven't looked at it. Generally, what happens is the stub pricing, or Nikola right now is pricing where the options, quote unquote, should be after the actual swap takes place. If there's a tender offer, depending on, is there a Dutch auction? I don't know exactly what it is, but having different factors in the actual takeover will change the price of the options in the company that's being acquired, and it looks at least mostly hard to borrow, as in can't sell it at all, which messes all the put pricing up. Just imagine, you can't short anything. So if you're a liquidity provider, you just keep selling puts, but you don't have an offsetting delta, so that makes it kind of dicey. And then whatever the deal actually happens, and the deal ends up coming into the options very quickly because there are guys on risk arb desks that are really good at this. One of the guys that actually used to run the VVIX pit, Dominic, and for Group 1, he was an ace at this kind of thing. And they actually hire rocket scientists to do this math to figure out where these things end up pricing out. So I think that's where it is. So unless you pull what the deal is out and see what the result is, anything in here, nothing is as it appears. at least for right now. I know that's not the answer everybody wants, but if you pay me a bunch of money per hour, I will go take a look at it and tell you what the thing is worth, which is fine. I just don't do a lot of risk arb anymore because it's just not what most of my students do.
But I think you did the right thing, Uncle Mike. This is what I've counseled all of our audience. First off, if you see something like this, where it seems like there's a free lunch, and it happens all the time when there's a corporate action, the puts seem like they're giving away free money. I mean, we get these emails all the time. In fact, we just had this on the show about a week ago. The listener wrote in with a corporate action, the reverse split out there in USO. And he said the same thing. This seemed like he was missing something, and it turned out he was. There was a weird little wrinkle, which he discovered by going over to OCC, that there was a cash component. It wasn't just an 8-for-1 pure stock split, and that was throwing off the ratios. So when you see something like this, listeners, Uncle Mike did the right thing. You can go there. I just did it myself, actually. You can call 88 options, as he did, or you can type in the symbol into OCC, and they'll usually have some clarification out here on exactly what's going on, if they know, if they have an idea of what's going on. Certainly, the most recent circular here seems to be from June 3rd, and it just talks about a symbol change. It says strike prices and all other options terms will not change. So that, at least so far, they don't have an updated circular that shows what's going on. But there is probably something like that. Maybe there's a known cash component that doesn't change. It's not all stock. There's some other leg lurking out there, listeners, that you don't know about. So if you don't know what it is and you're looking at the options chain, you're saying, hey, I could sell these and it's free money. It's not. It never is. You think the Citadels and the Jumps and the others of the world are going to let you have free money out there and something like this? No, they figure these out a long time before Joe Retail does. So yeah, it's not. There's another leg to be found out there, just as the Rock Lobster said. It requires a little bit of due diligence. Good question, though, Uncle Mike. I think let's put this in the to be watched category as well, and hopefully we'll see some sort of circular soon, because there's got to be some other little lurking unknown out there that we don't know. And then when we know about it, or Uncle Mike, maybe when you find out about it, let us know. A little bit of good digging by your clients out there. Getting a little aggressive. I like the clients. I wouldn't think of NKLA as an Uncle Mike type name, but the self-directed clients getting a little active out there, it seems like. Just like our listener here, Ray Shore, chiming in on one of our recent episodes, just saying, this was great. Better than CNBC. Well, thank you very much. Kind of a low bar, but hey, we'll take it. Thank you, Ray, for tuning in out here. This is a frequent question at a time like this right now. Let's see. First off, we got Rama Drift chiming in. Uncle Mike was talking about earlier in the show if we thought this was a buying opportunity or not. He said, we still have time. Friday is sell-off day. So maybe he's right. If that's sell-off day, what the hell is this? This is pre-sell-off? I don't even want to see what sell-off day is then. But there you go. So if Rambo Drift is correct, you got more time. Tomorrow's going to sell off more. Ensco11, he has a question a lot of people have right now. He says, this is for the option block gang. Well, sent it into the right show. He says, now that our portfolios are almost even after the market sell-off, what hedging strategies would you recommend? Well, unfortunately, our show didn't happen yesterday, Ensco, because we could have walked you through some scenarios and maybe hopefully save you some money on a day like today, because that's kind of what you're hedging for. Mr. Uncle Mike, I know you're knee-deep into NKLA right now, but this is kind of the thing you do day in, day out for your clients. What would you recommend to Ensco11 as well as everyone else out there, particularly a day like today, who's saying, how can I get my hedging on in this environment, sir?
Well, here's a couple things that you can do. If you have a majority of your money within an IRA, a Roth IRA, a SEP, a simple, or some type of qualified account, meaning that if you were to sell stuff, it would have no tax consequence. This is what I've been doing for a lot of clients over the course of the last week, just because of the fact that, like I said earlier in the show, I was very concerned with the 3,200 number. And essentially, what I have is with a lot of my buy and hold style clients, I've even shifted even more out of buy and hold over the course of the last week or so. And just the reason is like I said, we've had just a near 50% rally in less than 3 months. And if I'm wrong and the market keeps going up, then I'm okay with that, quite honestly. But what I did was I shifted a lot of money out of stocks or holdings and put into either cash or things like short-term bonds or government treasuries or things like that. And then by doing that, what I have now is I've taken a majority of their holdings and have done that. And now my finger's on the button with them now. I've added them to my aggressive strategy with a smaller portion of it to where if we go above the 3,200 mark on SPX or 322 and SPY is actually what I'm watching as my actual number, then at that point, then I'll start buying some calls and doing my aggressive strategy with them and create my favorite strategy is my simulated index strategy. That's what I do for a lot of higher net worth people, a lot of people that have some money in an IRA, more money outside an IRA that where we do different things for it. But the bottom line is that the market's going to go up, down, or sideways. If the market goes sideways, this move is going to be a draw. If the market goes down, then I'm a flipping genius. But if the market goes higher, we still have a very good opportunity to match what the market does based on buying calls or buying or selling spreads or whatever I'm going to do with it. That's some type of bullish aggressive option strategy. And so by doing this for the clients that I've done that for, which is a vast majority of them, I think it's going to be, we're all going to sleep easy this weekend, regardless of what happens in the marketplace. Now, where it doesn't fit is that I have some clients that are in their 20s that have come into money rather quickly in their lives. They've been very successful with their careers, and so they have money outside of IRAs. And so for them, I think it makes more sense to buy and hold from a tax standpoint. But for the clients that have a lot of their holdings within qualified accounts, which is a vast majority of my clients, I think this is a very good way to go. For a lot of reasons.
Uncle Mike, you're always a flipping genius. What are you talking about here? Sometimes looking like a flipping genius. Always a flipping genius. Uncle Mike out there. But you're right. That's a position people don't usually consider. People think I want to be fully invested and hedged, and that certainly is a way you could go. We've talked about that before. ENSCO, identify the levels where you're most concerned. Don't go out crazy buying a lot of protection, like out a year. Keep it probably within about 3 months is usually a pretty safe combination of time versus getting a little bit of extra bang for your buck versus paying too much. But there are other ways you can do it. I just had a guy on the network earlier this week, hopefully you checked it out, talking up a black swan fund, well, what he called a black swan fund. In reality, it was just effectively T-bills and some calls. So you could do this a lot of different ways. It sounds like you're a little bit concerned. If you are, and certainly today's could spook you. If you're sitting on some gains after this recent rally, no shame in taking it off the table, especially if you're in, as Uncle Mike referred to, a qualified account where you don't have the tax purposes. And then if you want to still play, pick up some verticals, pick up some calls. That's a great, cheap way to maintain exposure while all the rest of this freaking madness is popping off out there. You don't have to worry about it. So all you're really risking is the calls, and effectively the rest of your money is in cash or T-bills, wherever you want to put it. So there are a lot of ways to play, and right now that might be a saner way to do it than just trying to chase this downside and picking up puts that are going to be very expensive right now and paying through the nose for that. Versus maybe some of these other ways. So that's not one we talk about a lot here on the network, but it is an alternative. I don't know if I would call it a black swan like our friend did this week, but interesting stuff nonetheless. We got to keep on rolling. You guys have a ton of questions. We'll try to get to more on TWIFO coming up in a little bit. But now it's time for us here on the option block to go around the block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
All right, welcome to Around the Block. Let's check. Let's see how bad our sell-off is doing right now, listeners. Is it exacerbating? It's pretty much almost exactly unched from where it was at the start of the show. It makes you wonder if my platform has frozen here or not. It looks like off about almost 4.5% in the S&P, about 3 2/3% in the NASDAQ, and about 5.25% in the Dow. So pretty similar level. So it hasn't exacerbated down to some crazy limit down level since we started talking here. Listeners out here. Let's go back around the horn. Let's start with the rockingest of lobsters. Mr. Rock Lobster, what are you and more importantly, Volman, what are you watching for the rest of the week? And make sure Volman doesn't mute you this time, sir.
Yeah, I know. He went back into his closet, his little stickman closet. The simplest thing is now at this point, now that vol is moving. Remember, we realized vol had gotten to the high teens just as early as most of this week, to be honest. So this is a massive jump from where it was, and So the part of this is, can this sustain? So right now the curve is priced like you're expecting a lot more vol. The front went massively parabolic, so you have a backward curve again. So that's what I'm looking at. Can the sell-off sort of hold? And can this level of vol be maintained? What I would say is there is not a lot of backwardation in the curve. So, it's hard for vol to go higher from here if you don't see a ton more backwardation than there is, because the VIX was already high enough to kind of expect the sell-off, so to speak, like we talked at the beginning of the show. And now that it's kind of happened, people are going to start taking some profits on puts, and we'll actually see if the vol holds up. And I think that's a key thing. If actually cash level gets sort of below the futures again in the July cycle relatively fast, I would say that the sell-off we're having is going to start slowing down a bit.
Yeah, we've been talking for a while. Maybe would VIX retreat from these around 30 levels? It's been hovering for a while, and maybe allow people to reset and put those upside hedges on again in VIX land. And the short answer, at least for today, is no. We'll find out more, of course, tomorrow on Vol Views, or as our friend Ramudrift said, sell-off day tomorrow. Maybe we'll see more. If you're a crazy long perma bull right now, maybe you don't want to hear that. Mr. Uncle Mike, the only crazy perma bull I know right now. What are you watching for the rest of this week, sir?
Well, seeing if we can hold 3,000 as well as the 200-day moving average, that's a big deal. I don't know if I'm necessarily going to be taking any big positions tomorrow by any means, and certainly not today. Maybe you never know. But I think that we really need to watch the 3,000 mark. I think that's very key at this point in the short term. If we could hold that, then essentially what that would tell me is that we've had a big pullback on a big rally, then it might be a big pullback for an even bigger rally. So we'll see what happens. So those are the things that I'm watching. We
will see, indeed. Unfortunately, we won't see on this show because that music means we're done. Don't worry, listeners. If you're listening to us now, we'll give you some fun stuff to chew on in between. Maybe a boot camp, maybe some OPR, maybe both. Who knows? And we'll be back in a little over, actually exactly half an hour now, to talk TWIFO. Got some good folks joining us, including the guy who oversees all the options over there at CME. A lot to talk about with him, so we'll get to all that in a little bit. Before we do that, let's go back around the horn. Let's start in the land of Volman. Forget about the Rock Lobster. I want to hear what Volman has, Mr. Rock Lobster. If I want to go meet Volman and talk to Volman, where should I go? What should I do?
Well, you go to Twitter. That's about the only place he lives in public. If you do want to learn about vol and join our Snappy Vol Club, hopefully we'll have some swag and cool hats soon. Go to optionpit.com. And I'm doing a webinar tonight for the Silicon Valley Options Group. So if you want to kind of see how this vol stuff works a little bit, get some insight and inkling, check the Silicon Valley Options Group website. You can probably sign up for the webinar there.
Yes, they're all going to want to know, how do I hedge my Facebook and or Tesla and or Amazon positions? I'm guessing you're going to get a lot of those, Mr. Rocklop.
Yes.
And I want to, speaking of, if I get the trading club, I want a Volman shirt. Where can I get that, sir?
We don't have the swag ready yet, but it's coming. All
right. Stay tuned to optionpit.com. Get all your sweet Volman swag. I want to see a picture of him hitting the mute button on the Rock Lobster. That would be a good one. And Mr. Uncle Mike, you don't have a sweet Volman, but you got some sweet portfolio adjustments going on over there. Folks want to learn more. Where should they go? What should they do?
stcharleswealth.com or give me a call directly, 630-885-0017. Be more than happy to have a conversation with you. And if your advisor is afraid of the bear market and just prefers to not look at it when it goes down, I think you need another advisor. Give me a call. Would love to have a conversation with you.
Maybe you have a reason what that weird little hanging Chad is out there in NKLA that's causing these options to be so screwy. If you know, hit up Uncle Mike. He can inform his client out there. So we love you guys as a resource as well. And hopefully you guys are staying safe, staying sane. Hopefully you're keeping your powder dry in these crazy markets, not going off half-cocked out there. And if you want to stay sane for a little while longer, stay tuned to us. We'll keep you sane for a bit. We'll be back in exactly half an hour. Otherwise, we'll see you back here tomorrow. Volatility Views, noon Central, 1 p.m. Eastern. Then it all kicks off again on Monday for more of The Option Block.
The Option Block is brought to you by TradeStation. TradeStation has been giving options traders an edge for over 20 years. Their suite of simple yet powerful analysis tools and lightning-fast order execution can be accessed as an app on your phone, web browser, or computer. Education is in TradeStation's DNA, offering help for traders of all levels. And now, TradeStation is commission-free for equities and options trades. For more information, visit tradestation.com/Options Insider. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.